Welcome to the Audit Committee of the 30th of October. Are there any apologies for absence, please?
Thank you, Chair. We have an apology for absence from the independent member, Animesh Chandra.
Thank you for that, Steve. Can I sign the record of the meeting on the 11th of September as correct? Great, thank you. I don't have any urgent matters. Does anybody wish to raise anything urgent? Thank you very much. No urgent matters. Have we got any declarations of disclosure of pecuniary interests and other significant interests, please? No declarations, thank you. I now come to item 5, the failure to prevent fraud. And I ask the Head of Internal Audit and Counter Fraud, James Larkin, to introduce the report, page 19. Thank you.
Thank you, Chair. Yes, the Economic Crime and Corporate Transparency Act 2023 introduced a new offence of failing to prevent fraud, which is enforceable from the 1st of September 2025 following the release of Home Office guidance. Now, as noted in the covering report, this offence may be enforceable where an employee, agent, subsidiary or other associated person commits a fraud intending to benefit the organisation. Now, the only defence is to demonstrate that the organisation had reasonable fraud prevention measures in place to deter or prevent the base fraud from occurring, and it's the Home Office guidance that outlines what would be considered reasonable prevention measures. Now, as an organisation cannot be liable for this offence if they are the victim of a fraud, we feel that there is a low likelihood that the Council could face action under the Act. However, the impacts associated with such an event could be significant, and as such we have assessed the Council against the Home Office guidance to ensure that appropriate measures are in place and that the Council would be in the best possible position to defend itself should it ever be necessary. Now, as you'll see from Appendix 1, the results of this assessment have been RAG rated and things are on the whole very positive, but we've identified some recommended actions to strengthen the Council's position should it ever be required. It should also be noted that these recommended actions would also strengthen the Council's overall fraud prevention measures to help reduce the possibility of being the victim of fraud as well. So it's not just about this Act, it is about strengthening overall fraud prevention. That's all I was going to say by way of introduction. I'm happy to take any questions members may have.
Councillor Hackwell.
Thank you, Chair. And thank you for the report, James. A few things. One, you mentioned the LATCOs and that they've got to be independent, but how are we going to ensure that the LATCOs are doing the right stuff? Are we going to go and do an internal audit on what the LATCOs are doing to make sure that they have implemented it? Because I guess ultimately, especially with the two that we wholly own, that we would be liable if they went wrong. So that was one question. You mentioned about making the fraud training mandatory, but we know from previous meetings, there's been training out there that you've offered and it hasn't had a very high take-up. How are we going to ensure that it's mandatory? I know that where I used to work, they gave you a mandatory course to do, and if you didn't do it within 3 weeks, you couldn't log on to your PC without doing have we got any talk? And that was 10 years ago, so I'm sure that things have got a lot slicker and better. Can we do something similar to enforce that mandatory training takes place? That's about it at the moment. Thank you.
Thank you. Yes, so in terms of the LATCOs, we are doing some assurance work with them at the moment, so they're doing a self-assessment, and we are providing a validation of that for the shareholder boards. Obviously, the fraud stuff's a bit different. I've got to meet with the boards or at least the directors to explain this situation and let them know they need to be looking at this area. It could be that we can do that assessment for them, but I would imagine the council are going to want to charge them for our time. If we can resource it, we'll quite happily do it. But they need to be aware of it and make sure they've got appropriate things in place. In terms of the training, the sessions that we've been offering, they are actually sessions delivered by my staff. What we're looking at is digital training that we can roll out via the likes of meta compliance and things like that. There's been cybersecurity training, data protection training that's been rolled out to the organisation. At the moment, we haven't got anything digital for fraud prevention. We are looking at fraud. There's a couple of companies that provide fraud awareness packages that we can tailor for our own council branding, that sort of thing. So we're looking into the costs of that to roll that out. My team would still be on hand to deliver training to specific teams, or because this would be fairly generic awareness training about how fraud impacts the council. We can still do training with services on fraud in their specific area, and that would carry on being done by my team. But at least we'd have something that we know has been rolled out to all staff, and we can monitor who's done it. So that's the plan.
Councillor Lawrence.
Thank you. James, you mentioned that it's highly unlikely that the council would ever benefit from fraud because we're not a commercial organisation. I'm just wondering how many hours you've spent doing the assessment for this.
I don't know, to be honest. I wasn't keeping. I wasn't. Well, no, I wasn't. I obviously. The reason I say I don't know is because obviously I've had to assess Gravesham at the same time. So, because I'm responsible for both, so I haven't been keeping tally of how much time has gone into it. But as I say, the actions we're recommending out of this, we've looked at it from the point of view of defending ourselves. So we've got appropriate prevention measures in place. But it was a useful exercise nonetheless for us as a potential victim, because I'm kind of looking at both sides of the coin at the same time, aren't I? When we're talking about fraud awareness training, it's about making sure that we've got that appropriate training in place so that no one's going to commit a fraud that does benefit us, but at the same time, we want to make sure we're not falling victim as well. So I think it's been worthwhile. As I say, because you cannot be liable for this offence if you are the victim, there's very few frauds that are going to take place where we could potentially benefit. I mean, the easiest example to give, and I think I said this at Scrutiny Committee, is if you're working for a company and you're on a commission-based contract, you commit a fraud to bring in business, the company benefits, as well as you getting your commission that you wouldn't have otherwise got, the company is benefiting from that business. There's a very limited number of areas where I would imagine a local authority is not going to be the victim. Most of the stuff we deal with is people defrauding us with money we're paying out and things like that. So, but the possibility exists, and it's the impacts that are the most worrying, because if you are prosecuted, there's unlimited fines and things like that. So I think it was worthwhile doing this, But I can see where you're coming from about how much time have I had to put into it, but I think it's worthwhile.
Thank you, Chair. Yeah, thank you, James, for that. I'm just wondering, there must be a crossover with anti-corruption legislation with this as well, because if you pay a bribe to someone to get business in, the company benefits. So it's just an interesting way. But I'm just, the question really is, have we got to do this annually, this assessment?
No, I don't think so. I think the only time we would probably need to review this is if the guidance was changed. For the most part, we know what the guidance is, we know what we've got in place. Unless we make significant changes anywhere, I don't think we'd need to revisit it. We just have to make sure we keep these things in place.
Councillor Nestroff, sorry.
Thank you, Chair. Thank you. Actually, my question, I had two questions. One there was about the what costs as well, because that's, I think, it's where we are most exposed. So I'm going to change my question a bit. Action for proposes review of all contracts of third parties for anti-fraud clauses. Do you know how many of the contracts currently lack such a provision?
That I don't know. As I say, these are suggested actions because we can be liable if an associated party were to do something that ultimately benefits the council. If we have third parties delivering services on our behalf, we need to make sure that we've got some form of clause in our contracts to compel them to have appropriate fraud prevention things in place. So what we've suggested is, I mean, I don't know how many third parties there are delivering services on behalf of the council, but there are going to be things in terms of, I can't think of the name of the Prosperity Fund. That's the one. Thank you. I couldn't think of the name. Obviously, that fund is to help companies deliver things for the council. So I think it's in those sorts of areas. I don't think the volume is high. But I think, as I say, it's those sorts of areas where we need to make sure we're covered. So again, I think it's a necessary step to protect ourselves.
So we're going to have it as a condition maybe for the contract. So
yeah, that's what it's about. It's about looking at the terms and clauses within those contracts just to make sure we're covered. And I'm hoping, he says, touch wood, that the volume isn't that high. But as I say, I think because that really is where our risk exposure would be, I think we do need to make sure we look at those.
thank you. And one more question. There's some of the recommendations suggest joining CFAS, which is Insider Trader Database, which would imply new digital tools, which would imply more cost. Do we have a budget for that? Have we make a financial impact assessment for that?
Not as yet. That's why it's a recommended action. We're not saying it absolutely must happen. We're recommending that it's considered. Obviously, that conversation would have to take place with HR, because this insider threat database is about enhancing our due diligence when we're taking on staff. Because what this will show is if there's anyone applying for a role that has been subject to, it may not be they may not be criminal, they may have been subject to disciplinary action for inappropriate conduct, potential fraud, things like that in another organisation. If it's registered with CIFAS, that would pick it up, and it gives us enhanced due diligence in terms of who are we bringing into the organisation, because obviously a lot of what this new act is aimed at is about those insider threats. It's about identifying employees of the service potentially who may commit frauds that ultimately benefit the organisation. So, as I say, it's about enhancing our due diligence so that we know who are we offering employment to. But there would have to be a cost-benefit analysis to that, because yes, you're right, there is a cost implication to membership, access to that database.
James, I've got one. Moving on from the route that Councillor Nestroff was on about the procurement and contract side of things. We have reasonably recently updated the procurement strategy and now I'm lost for the word, policy. And therefore, would it be appropriate to maybe add another action which would be from this committee to ask you to take it away with the person who's responsible for the procurement policy to ensure that this element that you need looking at is included in it? Is the committee happy with that?
I'm wondering how the council would benefit from a fraud in a procurement scenario, because
It wasn't necessarily, it was that clause about whether we had something with the third parties once we let a contract about, you know, them. It's a little bit like when you have the traceability down the supply chain.
yeah,
I'm making hard work of this. I'm sorry about that. I have a funny feeling that James knows what I'm trying to do, but I just can't articulate
that'd
it.
make him a mind reader, Chair, wouldn't it?
Yeah.
Yep.
I think I know what you're getting at, Chair. It's about the procurement team being aware of this so that when we're going out to tender for new contracts, that someone is aware and making sure that we've got those appropriate clauses in whatever contract is awarded to make sure that that fraud prevention practice is there. I see where you're coming from, yeah.
Sorry.
Challenge.
Yeah, I'll keep that one in mind. Yeah, I hadn't thought about it that way, yeah.
We move to the Vice Chair?
I move the recommendation on page 19, the committee to note the outcome of self-assessment and propose actions. Is that agreed?
Proposed
actions sorry.
Including what
Yeah.
is going to really work if you can.
Sorry, I think that was your part.
Now, can I ask the head of corporate accounts, Andy? No, Andy's not here because it's Claire tonight, sorry. Claire, if you would move the updated annual progress report, please. I'm on the right number, aren't I? 6? Yeah. Yep. Sorry.
In fairness, all I was going to do is invite the auditors to to introduce their update. Yeah, but Claire and I are here if there's any questions afterwards.
Good evening all. Before you is our external audit progress report capturing the progress as at the end of September 2025. At the last audit committee early September, we reported that approximately 30% of our planned audit work has been completed. This report highlights that this has now progressed to approximately 45%. At the end of September, we paused our audit procedures as this was the planned completion date for the audit of Medway Council. However, as we've been unable to finalise a number of audit areas, we've agreed with management to resume audit procedures in January 2026. Our audit focus in January will remain on in-year transactions, as highlighted in the report, and this is because of the backstop date, which limits the amount of work we can do before the backstop in end of February. This report goes into detail on position on key audit areas, and whilst some progress has been made, several areas remain outstanding. Therefore, to meet the January deadline, we've requested that management provide outstanding information by the end of December to allow us to achieve our plan for January. We are in regular contact with officers to ensure that these outstanding items close down and reach a good endpoint by the backstop. And for January Audit Committee, we'll be presenting our audit findings report as well as our annual auditor's report. And we aim to issue our audit opinion by February 2026. I'll pass over to Matt to add any additional comments he might want to add on the report.
Thanks, Ibby. I mean, I think Ibby's summarised the key points there, obviously, and hopefully in line with what we shared at previous audit committees. I think this is obviously the last year where it runs to the end of February. Next year's will be the end of January, so the January 27, and then effectively it's November 27. So I guess in a way, the sort of January, February period, and then I guess rolling into the start of next year's period is probably, I guess, one of our key areas if we're going to try and bring things back to sort of where we need to be. So we'll be looking, as Ibby said, we're looking to work with management and the finance team closely to make sure we can get for as much as we can do in that period to try and make the later years more straightforward. But yeah, the deadlines are starting to move to the left, shall we say. So yeah, trying to get as much done as we can in the next few months will be really important. But I think that's all I wanted to say, but happy to take any questions.
Sorry, Councillor Lawrence.
Come on, wake up, Chair.
I know, it's not a good day.
It's the audit committee. It's, Chair, I've only got one question. I mean, I think it's always interesting to see the detail of this. Well, maybe there's two questions. At the last audit committee, Andy mentioned there have been some staffing issues. I just wonder if we're dealing with those staffing issues. But my question is really, should I be concerned at the number of items that says we have not been provided with the information and we've stopped, and because we're focusing on with what's it say here? We have plan focus on testing income and expenditure. We're not going to carry on with this. So if we look on page 44, other long-term liability leases, we have not been provided with the necessary working papers and information to support these, but we're going to not do any more work on it because we're focusing on some other things. So my only question really is, should the committee be concerned at that type of comment, or is this just normal run-of-the-mill local authority audit work?
I mean, I'll do that bit first, and then Phil, I'm sure, want to talk about the staffing. So I think if I look at it in general terms, I think there is, I think we'll probably, hopefully, we tried to reflect there has been some progress from where we were last year. I think if we look largely at the what's needed to achieve the in-year I&E, I think that probably is achievable. Assuming we get all we need by Christmas, then I think that is achievable, and I think that's kind of what we set out to do initially. On some of those areas that there are, I guess it is concerning. I think the leases in particular, I don't want to draw out a particular area, but you've picked leases. Leases is the one. Well, no, leases. Well, it's quite a good pick because leases is the one where there's been a new standard that's come in for 24/5. I think we've had conversations with the finance team in terms of where that is. I think if we don't get to that by the end of February, as we've said there, it's something we'll still want to look at anyway because it needs a proper look. I guess it's the first year it's gone in. I guess it's the kind of thing that if things weren't implemented correctly in year one, they're only going to get worse and so on. So something like leases, we will come back and try and look at some point in time, just because if we don't look at it, it's just going to set things up to fail, really. Some of those other areas, I guess, we're perhaps a little less concerned because they may well write themselves. I think, as I've said before, some of the things around property, plant and equipment and those kind of things, in theory, there's ways the authority could get assurance over that at a point in time without us needing to do year in, year out work. Obviously, some of this is subject to where local government goes in terms of statutory override and those kind of things. I mean, that is the path. I know I've talked about in previous meetings, that's the path at which it's likely to go down. I think all I will say in this forum is that they want to be using that on a smallest number of authorities as possible. So I think there is at the moment a continual push that it's kind of dangling there with no certainty to try and get as many organisations as possible, auditors and councils, to try and move forward as much as can do, so that they're not using it for 100 local authorities. It might be 10, 15. I mean, that's all hypothetical, but I think that's where they'll want to try and do. So, yeah, I guess there are some bits, but yeah, I think some of those will write themselves. So, I mean, leases, I'd say, is a bit of a area of focus this year, and obviously it's something we will try and look at, even if it's in March or April, just because of how it will play through.
Can I ask Phil just to put some detail on that for us? Yeah?
Okay, thank you. I am going to comment on both your questions, actually. So, I mean, it was always going to be the case, this meeting only being a few weeks after the last one, that some of the conversation, I think, will be repeated. And I think at the last meeting, we held our hands up and said that actually what we'd failed to do is make sure that for every transaction we had the evidence there. And so what we've been trying to do is, when the samples have come in, try and retrofit that, chasing around. We need the backup documentation for that transaction. And I think Matt hit the nail on the head with the leases. It is a new standard, so it's an area of work that we've not been necessarily, or the organisation hasn't necessarily been geared up for providing that every year either. And so, you know, we had this conversation last time out. We just need to do that better for the next set of accounts. We just need to make sure, and Andy and Claire have been working with the team, and with Grant Thornton, we've got a meeting coming up, and a sort of workshop type session. How are we better prepared for when the auditors come in, that they say, here's a sample, and we go, there, have at it. That's what we need to get to. So, hands up, we're going to try and do something about it. The staffing has been a problem. We've had some issues with sickness and a little bit of dysfunctional behaviour, I think it's fair to say, in the team as well, which we've been wrestling with. But I think more fundamentally, I've recognised that my finance team hasn't evolved over the last decade, and I think I've got too much resource in the kind of management accounting area, doing work that actually should be done by the services themselves in terms of forecasting and that sort of stuff, and not enough resource and resilience in my corporate finance team, which is where all this technical stuff sits. And so Andy, Dave and myself are going to have a look at the structure of the team as well, and within the same cash envelope, because we haven't got the ability to grow it. I'm going to have to try and reallocate resource so that things like this and managing our treasury, looking at our balance sheet, all that kind of corporate techie stuff, that I resource better going forward. So.
Thank you, Phil. And it wasn't my intention just to labour the point from last meeting, to be honest with you. I just see what is in front of me, and so it wasn't about catching anyone out. But just in terms of that, this providing backing data for individual transactions, we all know that's a bit of a nightmare. I'm having an audit myself at the moment at work, so I'm enjoying every moment of it. But are we looking at our processes internally so that we're not going to be caught out in that again? And that's a big part of that. You're doing your work. Excellent. Okay. Thank you, Chair.
Councillor Hackwell, you indicated.
Thank you, Chair. A couple of questions, if I may. We know that we've stopped work at the end of September for Grant Thornton, and they're going to come back in January. Have we got a list of everything they're going to need for the 1st of January? Or are we just going to, and therefore, get it all ready and prepared, you know, and have we got a plan of this is the people that are going to do it, this is the time we're going to do it? Because by the time we get to the 1st of January, we don't want to be sitting where we are at the end of September. So that's...
I'll let our auditors answer whether they've given us a...
So yes, we're speaking to officers. We speak every 2 weeks, saying this is the outstanding list, this is what we need. So we're in regular communication with Andy and Claire to ensure that we get the information we need for the end of December, so we can start in January and just get on with what we have to do for the evidence.
And how will that be monitored and flagged if it goes wrong? You're not getting the information. So what's the process to make sure that so come the 1st of January, we've got absolutely everything?
I mean, we're also in communication with Phil, so if needs be, we get Phil involved, and he will speak to his officers to ensure that we get the information we need. So that communication is there, and it's a line that we use as we need.
Second question is around in the report. It mentioned a serious control weakness of people that are posting journals that are not in finance, and also people that have been temporarily in finance have still got the ability and access to post journals when they're not in finance. So their temporary access doesn't go with them when they leave the job. So what are we doing as they've already been identified as a serious weakness? Hang on. It's page 40, I think. Yeah.
Strikes me as a wider issue.
Yeah, but it should be an item.
I mean, obviously, we could pick it obviously separately and make sure we come back, certainly in the next meeting, because it'll flow through to the AFR in terms of it. I think, from my recollection, obviously, it's quite a key area of focus for us because it sits behind that management override risk. It certainly plugged up a significant number of unique identifiers, which we believe were journal posters. I mean, I guess perhaps we might see at London Borough, perhaps say 15 to 20. I think we were at the 150 mark. Obviously, we can pick this outside, but and it's one of those where I guess because of the nature of it, we can't go, we're going to look at X. It's almost kind of like, because actually anyone, if someone's posted a journal, that might be the journal that someone shouldn't have posted, for example. So it's taken quite a bit of our audit effort to get to that point. I guess obviously, yeah, we can talk more outside it, Phil, in terms of the practicalities of it. And
Yeah.
you've must have shared it with Andy.
Can we be clear about what you mean by posting? Do you mean to my system?
I believe so, yeah. I mean, we'll double check the facts, certainly, because obviously in the AFR we'll be clear on it, but I believe that's what...
I mean, those sort of numbers, I would expect those sort of numbers to be raising journals, but actually posting them to the system, that doesn't sound right to me, but
It includes any sort of journal, so anything like an interface from IT, anybody posting a purchase ledger invoice through the system that's been logged as a journal. So there are a lot of people doing having those sorts of interfaces with the system.
Can we pick that up offline?
Just finally, if I may, we know that the auditors are doing extra work with Voxmore, and there was a negotiation to take place about how much that was going to cost us and where the money's coming from. As that we mentioned last month, I just wonder if there's been any progress on that.
Well, we've received some extra grant to facilitate this. Whether it be enough is another question.
Well, we're catching up, aren't we, next week, Phil, on, well, not solely on this, but it's one of the things we'll pick up there as part of it. I mean, I think we just want to, it's a balance between, in terms of us doing, the cost-benefit analysis ultimately of us ploughing away and getting no further and, incurring unnecessary expense. So, yeah, we'll have that conversation next week.
Can I just come back to that journal posting and the comment that Claire made very helpfully? It would be useful if this committee understood whether any of that was happening, because you talk about interfaces with IT and stuff like that. We're doing actually quite a lot of experimenting to try and streamline processes, and it could be that that's flagging something false, and it would be helpful if this committee could be assured that that was either identified, because the people at the end of the journey to post journals or test journals are going to be identified. If it was me doing it, it'd be my login. If it was Councillor Nestroff, it'd be his login. So I think we'd be in a position to identify that, and I'd be quite interested to hopefully find that some of these are very legitimately outside of finance, just because of the type of thing that they were doing. I don't know whether you feel that you need that level of assurance, but I think you'd probably like to know it as well, because you're in charge of the other thing.
We said we
Yeah.
discuss.
Councillor Nestrov, thank you.
Thank you, Chair. Thank you. Basically, my question is the same as everyone else's, because we have this item every single time, and we ask about the delays, we ask about resources and capacity and the team. My question is simple. Are there lessons learned? Are we going to be sure that next year, or the next audit report, we're not going to run into the same problems that we have now? That's my first question.
Well, I think it's as I responded to Councillor Lawrence's question. Really, the lessons learned are that we need to be better prepared in terms of having evidence provided before the audit starts, rather than waiting for us to get the samples. That's one of them, and I talked about my plans to resource this activity differently and resource the finance team differently going forward. So I mean, for me, they're the two lessons. You've all alluded to resourcing. Have we got enough resourcing? Clearly not. So I need to do something about that. And then something about being better prepared before the audit starts.
Yeah, the report notes that the finance team has been right-sized in 2024-25. So yeah, I guess we would expect something like that. Yeah.
I won't make it any bigger, but I will realign.
Just delegate different roles. My second question is on page 43 at the bottom, auditors identify reconciling items dating back to 2020. Have you seen it on page 43? What's the total value of these items, and can you just explain more about it? I kind of don't understand, and I need more information.
I'll step in here. So the bank reconciliation is done annually, and so this is where the council compares what the cash balance is on their ledger in comparison to what the banks say their balances are year end. So this exercise, we expect it to be done annually, and where they're reconciling items, we test this as part of our work. So we tend to see reconciling items in line with the year that we are auditing. So sometimes we expect it to be at least a few months post year end or few months before the year end. So we've identified in this case reconciling items that are as far as 2020, which is what we've highlighted. I'm not sure the exact value at this point, but that is what we're just highlighting to the committee here, that reconciliation should be done quite regularly so that things can be closed down as soon as possible.
Thank you.
I just wanted to make a comment. When we at the last meeting, and it's just for the record, that if we get it right and you know what's to be in the samples for this year, that hopefully once we get a level of confidence within the samples, there was, correct me if I'm wrong, Matt, there was a hope that next year the sample sizes won't be as large. So with the realignment of staff and the preparation that Phil's going to do, I just wanted to be clear that we did say that last time round.
Yeah, absolutely. I think we absolutely did say that. So, because obviously at the moment we're kind of starting from a point of a very low level of assurance from previous years, and I guess that kind of drives us to picking a bigger number. Yeah. But actually, if we can get through the in-year pieces, then we could then have a different conversation around, even if it's a sort of adding 5% to our calculator, that will knock down some of those numbers. I mean, like if I look at expenditure, other services, testing 237 items, that's going to take a lot of time no matter how switched on your finance function is. If we were to get that to say 150, that's quite a difference, isn't it? So yeah, we'll continue to revisit, and I think, as I say, that is part of the sort of reason for us to continue pushing through those figures. If we can then go, right, we've got assurance over those areas, then we can fill that in and and hopefully test a few less next year.
Thank you for that clarification. Thanks. Vice Chair, please.
I move the recommendation as written at page 31 of the pack.
Agreed?
Agree?
Thank you. We're now on item 7, the Treasury Management Strategy Mid-Year Review Report for 25-26. And I'm going to ask Claire to introduce that, if that's all right.
Thank you, Chair. This is the mid-year review for the current financial year and gives an overview of Treasury management activities since the 1st of April 2025. This follows on from the Round 1 report presented to the committee in July. The mid-year Treasury review can be used to highlight any areas of concern since the original strategy was approved by Council on the 27th of February 2025. The key indicators relating to the external borrowing against the capital financing requirement is shown on page 51 and shows that the borrowing remains within the limits set by the CFR and indicates that the Council is only borrowing for capital purposes. Section 4.2 and 5 review the approach to smoothing the borrowing maturity profile. Recent higher than anticipated interest rates combined with higher than ideal yields on government gilts have meant that the Council is still using shorter term borrowing. However, the expected downward trajectory of interest rates over the coming months and years, as shown in the table on page 65, are likely to mean that extending the date of maturity and therefore assisting in smoothing that profile will become a more likely option. Paragraph 4.2 on page 54 reports £221 million of short-term borrowing as per the 30th of September, and the report states that £106 million remained repayable by the 31st of March 2026, and this is shown in the profile graph at 5.7 on page 56. Section 5 reviews the borrowing policy, and in that respect, the aim is to keep borrowing as low as possible, which means that with regard to the investment portfolio at Section 9, the cash invested will also be low. Details of investments are shown at 9.3 and 9.4 on page 59. The benchmarking chart on page 61 shows investment returns are as per expectations. Medway is the heavier mark just above the red line. Paragraph 9.5 on page 59 details the decision to request a redemption from the Patrizia Hanover Property Fund. Officers, however, will be looking at our investment strategy to ensure we're getting the best returns whilst ensuring security is the first safeguard, followed by liquidity and yield in that order. The table at 9.7 on page 60 details the interest and financing budgetary forecast as at round 1, the latest available published figures. Officers are reviewing this at the present time, and due to the higher levels of borrowing and the interest rates remaining at a higher level than previously estimated, are expecting that this may cause a pressure on the interest paid forecast for future rounds of monitoring. I'm happy to take any questions you may have.
Councillor Lawrence.
Thank you, Chair. Thank you for the report. I'm just wondering about, given where we are in the economic cycle, how we're monitoring our counterparties, and if any, are any of their risk ratings actually changing? And if they are, what action are we taking if someone falls, or the risk for holding our money with them becomes higher? That was my first question.
So we get our report on a daily basis from our Treasury Advisors, MUFG, and that's a list of counterparties that we would use, and it gives those ratings, and then we check that they haven't dropped, and if they were, then that would obviously be reviewed at that point, and then they'd be removed.
Do we set a limit for each counterparty?
I believe we do in the Treasury strategy.
Do we?
Yeah.
Okay, great, thank you. I'm just wondering, obviously the investment rates return, I think you pointed out quite rightly that where we are at the moment, but I'm just wondering what Office is doing about checking which investments are performing really well, which investments aren't performing so well, and whether we actually take action on that, or is it really just steady as it goes because the cycle, some periods they'll be up, some periods will be down.
Yeah, so, I mean, in terms of investments, we're mainly we're in a position of borrowing.
Yeah.
So the investments tend to be the deposit accounts and the property fund, sorry, I can't remember, the fund management deposit account that we use. And then we have obviously got the property funds as well, which have been reviewed, hence the comment about the Patrizia fund. So we're not really in a position to sort of be doing any other borrowing at the moment.
Fine, yeah, absolutely, okay.
Not for investments.
No, that's fine. I'm just wondering also that in terms of the capital programme, given where interest rates are at the moment, how regular are we reviewing those decisions to borrow against that capital programme? Are we holding stuff back in the hope that interest rates do turn around, or are we borrowing because it's in the programme, or we're borrowing and we're just accepting a higher interest payment? I've noted from full council, we didn't quite get to it, which was the borrowing on the new care home, for example. Would we delay that project if interest rates don't come down as projected? Because the amount of borrowing, I think the figure in the report was £130 million for the total cost of that care home, for example.
So I think there's two elements to that. I'm going to be having a conversation with the administration fairly soon about our capital programme and the extent to which we can continue to take borrowing or delay any of that programme. But in terms of when we do need to borrow, we're still continuing with our strategy of borrowing short term, because in expectation of the rates coming down. And you know, we are in a place where we do have to borrow at the moment. Some of it is this working capital borrowing that we have to take, not least because of EFS, but the send issue and what have you as well. But when we do, we're trying to take very short-term debt, but we've got to be careful because we've got limits on how much short-term debt we can carry.
Yep.
Now, sometimes when I talk about short-term debt, I'm talking about 1, 2, 3, 4 years as relatively short-term, but in accounting terms, short-term is less than 12 months. So we are taking loans of kind of more than 12 months, but when the interest rates come back down properly, we'll review our maturity profile and start taking some longer dated stuff.
Yeah, so it's on that question, Phil, then, do we have a formal trigger policy for when that actually happens? Have we set ourselves a target? Are we monitoring interest rates against that target and keeping a fine eye on where we can borrow? Because, I mean, when you look at that maturity profile, I mean, talk about Christmas comes in December.
Yeah. If I'm honest, and this sounds like I'm basically abdicating my responsibilities completely, but I do rely on what the Treasury advisors tell us. So this regular discussion that we have with the Treasury advisors, there will come a point when they start saying to me, now's the time. They know what I'm trying to achieve because we've had that discussion, but they will advise when that might be the trigger point. So no, I haven't set myself a trigger point or the Treasury team a trigger point.
Right.
But we'll be in constant conversation with the Treasury advisor.
And how often are those conversations with the Treasury advisors?
Well, the team will talk to them weekly. It's at least weekly. Myself, less frequently.
Yeah. The only other question I had was, obviously, we set our budget at the start of long in front of the financial year. Obviously, we get to February and we know what we think we're paying in interest. I don't think we actually see in here the actual amount where that's actually varying. I know it comes in the overall papers, but I wonder from an Audit Committee perspective, if we've budgeted at X, where are we at the moment against that? Because I was a bit worried, I think, last year, where I did ask whether we'd modelled different interest rate profiles against the budget. Because obviously, as this council and this administration continue to borrow at the rate they're borrowing, it just means there's less money to cut the grass, invest in place, and everything else. Thank you, Chair. Sorry, there was a question. Sorry. The question is at the moment, where we are in this financial year, what is the interest rate overspend or underspend looking like? Oh, I think we call it the pressure in council talk, but where are we with that number at the moment, Phil?
It's difficult to say at this stage. So that report still is based on the Q1 forecasts, because we haven't done our Q2 forecasts yet. But I'll be honest with you, I'm expecting it to go up because interest rates haven't fallen as I had anticipated and as the budget assumptions assumed. So I think Q3 you will see an increase in the Treasury forecasts.
Thank you, Chair.
Councillor Nesterov.
Thank you, Chair. I have a few questions, but I'm going to start with first about borrowing. Do we know what our current borrowing repayment profile looks like? Because next year we want to hit a target to keep repayments below 10 million a month. How confident we are that we can achieve that? My first question.
Yeah, so there's a chart, I can't remember which page it is, that's actually got the borrowing, 56, yeah. I think because of the pressures, like with the low interest rates at the moment, we are going slightly over the 10 million. It's been very difficult to do that, and as the environment at the moment isn't allowing us to borrow long term, things are having to be kept shorter term at the moment.
So are we confident we're going to hit the target next year, the one that we set, the council set for itself?
Don't know. How confident are we that we're going to hit the target of 10 million?
Below 10 million.
Below
10 million or
million
below every
a
month.
I don't think we are confident at the moment. We're carrying too much short-term debt.
Okay. Following up from that, on the report it says that one of our LOBO loans have been called and another may be called next year. What contingency plan do we have if several of those are called at the same time? Hard question.
It's difficult to set a contingency plan because we don't know what they're going to exercise their option. So the lender will exercise an option and they'll quote us a new rate at which they wish to exercise it, and at that point we make a decision whether we want to exercise our option to refinance or not. There isn't a contingency. That's why we want to get out of LOBOs, really, because it's a risk that you're carrying all the time. I mean, for the avoidance of doubt, I didn't take them in the first place.
No one's blaming you. Okay.
You've been around.
What are you trying to say?
You've been in for a while.
Okay.
You're the man before you as well.
Final question, capital receipts. The strategy depends on a fairly large amount of capital receipts to help reduce the borrowing in the medium term. Basically, where the money coming from? Yeah.
I think that's the thing. I mean, when we started started looking at our property and doing the review of our operational property, I think some people fell into the trap of thinking it was a fire sale, and that was never my intention. So even though the SIPFA recommendation suggested that we needed to look at disposing of assets, what I kept saying to the organisation is we need to look at each asset, and if it's not delivering value for the council, then one, is there an alternative use for it that would deliver that value? And if not, then look to dispose of it. And that has been the approach that we've taken and our corporate property team have taken. In terms of the capital receipts, I'm not sure what the absolute figure is at the moment, but we've certainly disposed of some assets already. Now, the ones we've disposed of were those, the early ones that we've kind of got rid of fairly quickly are the investment properties that we bought, and we will get rid of those with a modest profit in terms of the value that we get, the capital value that we get. They generated return for us while we had them. We've got a significant asset in Lordswood that's going to generate some money. I'm trying to say this, the ransom strip. We're not using that language, are we? And there are a couple of other larger assets, but we should see some of that. It's certainly several £million this year. With, I think the figure is about 25 million for next year. Now, you know, I'll be surprised if we get that, but that's the predictions that are coming out of corporate property at the moment. So yes, we are getting on with the job of disposing of assets, but I just wanted to make the point that we're not doing it in a kind of fire sale, sell the family silver type way.
Well, we want to get the value.
Yeah, that's right, exactly that.
Especially, we used to have a
Councillor Hackwell, did you indicate?
Yes.
You did.
Thank you, Chair. First of all, I just as part of the Audit Committee, I am very concerned about the money that we are borrowing. I've looked back at 2023, the end of the last administration. We have borrowed something like 430 million, up to 650 million. That's more than a 50% increase in the last couple of years. I don't believe any organisation can afford to do that. And we need to actually understand what the process is of us keep borrowing money and borrowing money and borrowing money, because we can't do it. And especially with LGR coming up, you know, did you read that the government's meant, or given one council 500 million to balance the books? Woking. Yeah.
It's only 1.2 million to go.
Yeah. So, you know, it is very, very concerning, and we just need to have a review of what we're spending the money on, because I don't know how we could spend 50% extra in capital funding in just over 2 years. So that's a real big concern. Yeah, but that was 12 million. It wasn't a lot of money. I am also worried about, you know, the Hanover, the Patrizia Hanover. It was the last Audit Committee we were singing its praises because we'd got a lot of money out of it because they'd sold some solar farm or something. And now this one, it looks like everybody's trying to pull their money out because they want their big and the funds going down the pan. And have we got another Lothbury fund that we're not going to get any money back from? So I'd like some assurances about that. That'll do to start with. Thank you.
Okay, so in terms of the amount of borrowing, you alluded to the Woking situation. I mean, the £500 million that Woking owed there isn't backed by anything. There isn't an asset on the balance sheet of that value. Now, I think the government have taken a dangerous, potentially set a dangerous precedent there. But that's not your questions. You're concerned about Medway's borrowing. I'm comfortable that reasons first. There's been quite some big projects. So we've just spent 42 million. Well, no, it wasn't quite as much as that. 30 odd million on 160 odd units in 2 blocks. So that's an asset on our balance sheet, and more importantly, that should reduce the cost of temporary accommodation. So I'm hoping that I see a reduction in temporary accommodation costs that will cover the borrowing that we need to pay That's what the business case suggested would happen. That those units won't be up and running till January, that's what we were told at CMT earlier this week, so we'll have to, watch that space. Obviously, some of the borrowing wasn't backed by a business case. They were decisions to consciously invest in the borrowing. So Brook Theatre, there's no business case that says that will pay itself back, but the administration decided to do that. Splashes, even that decision, which was taken by the previous administration, there was an acknowledgement that it wouldn't wash its face, although in fairness, it's doing better than we anticipated it would. So there's some big ticket stuff there. Wharf is £20 million. So you can see where we're getting to these kind of £200 million of borrowing, and a lot of that, so all of those schemes went through due governance process, and the decision was made by the administration, and indeed the council to put that money in the programme. The more worrying stuff in terms of borrowing, we've talked about EFS, we've talked about EFS at this forum. It's not ideal. I don't want to be borrowing. I certainly don't want to be borrowing every year to fund revenue expenditure. But I was in a position, and the organisation was in a position, where we didn't really have an awful lot of choice. And we are now one of 40 odd that are in the EFS place. We got there a little bit earlier because I didn't have as many reserves to rely on as some of the other authorities. I did a peer review at Redbridge not so long ago. They're now considering EFS because they've got to a place where they've run down their reserves, but they had reserves to play with. That's why they got there a little bit later than me. So that's not ideal, and I acknowledge that. Like I say, it was needs must. The other one that's a little bit worrying for me is in terms of working capital, because the trade-off between debtors and creditors is it's kind of it's snuck up a little bit, and I think this is an area where I'm talking about I need to strengthen my corporate finance resource. Maybe not had our eye on some of that stuff as much as we should do. So I need to look at that. Why have we got so much money owed to us by third parties? There was a time when we struggled with getting funding from the NHS, getting payment out of the NHS. I don't think that's an issue anymore, so I need to understand where that is. But they're the sort of three components of our debt. Now, what I'm saying to you, the expenditure on capital, that has gone through a proper governance process. It's backed by assets, so I'm more comfortable with that. The other two are the issues, really. So, I understand your concern and why you're expressing it, but, Yeah, the Patrizia. So yes, that one's an interesting one, because what happened is that it was described by Richard as they're a victim of their own success, and now everyone wants to cash in, and because there's a run and everyone wants their money out, it's put them in a difficult place. As soon as we were made aware of that, I basically said we'll have ours out as well. So hopefully we'll be able to do what everyone else has done and cash out with a profit. So we should make if we get the value that it's currently worth, we should make about £300,000 on the capital return itself, and in the over the several years we've been making 4%-ish return on it. So hopefully we will get out at the right time. I don't want it to be another Lothbury on my balance sheet, and hopefully I've acted quickly enough.
Sorry, Chair, if you just indulge me for 2 minutes. Phil, I've been following the sort of the shadow banking crisis that's been well headlined recently, where funds, banks and others, including pension funds like the local government pension scheme, have been lending lots of money to companies on the basis of higher returns of interest. And there's lots of talk about a potential bubble and a crash, and I'm just wondering whether the council has thought about that, has considered it, and if we've got any exposure. Now, I understand the local government pension scheme may well be where our biggest exposure is, because as Claire rightly says, we don't have lots of investments out there, but I'm just wondering if it's something that's on our horizon. Thank you.
So as you say, the biggest risk area for us as a local authority is our pension fund. But I was in a meeting with Kent finance officers not so long ago, and the Kent fund managers and the actuaries came to talk to us about the triennial valuation, and actually they were presenting a really positive position, such that I'm expecting that the employer's contribution for 2026-27 onwards to start coming down again. So our share of the fund, the Medway's share of the fund, is in surplus. It's 103% funded, something like that. And all the narrative and commentary that was coming out from the pension fund managers was that we're in a positive place. So they're obviously not seeing the risk that you've alluded to there.
Any other questions? Can I move to the Vice Chair then, please?
Thank you, Chair. I move the recommendation on page 52. The committee is requested to consider the report, note its content, and note that the report will also be referred to Cabinet and full Council.
Sorry, now we come on to the final item, which is the chairperson's annual report for 24-25. I'm taking it that everybody's read it. It's kind of a rehash of facts. Pleased that we actually produce one. It's the second one. If anybody's got a question, that'd be great. If they haven't, that'd be even better. But Claire, have you got anything you want to say on the introduction of it? Or you just say it as read? I thank you. I think we'll take it as read. If you wouldn't mind, Vice Chair, we're taking it as read.
I move the recommendation on page 67. The committee is asked to note the Chairperson Annual Report 2024-2025.
I'm happy to say that the meeting is now closed, and we're well ahead of the 8 o'clock, Councillor Lawrence.